gold is dominating the tokenized commodity market, with A16Z Crypto reporting that it accounts for nearly 99.8% of the sector's value. According to the latest report, the entire tokenized commodity market is valued at around $5.1 billion, with tokenized gold alone sitting at approximately $5 billion. This means that silver and all other tokenized commodities combined account for just $57.6 million, a stark contrast that highlights gold's near-total control of the space. Oil, agricultural products, energy, and compute tokens remain barely visible in the market. The broader tokenized asset market, including real-world assets, RWAs, has grown significantly, reaching $34 billion recently, though stablecoins are excluded from that figure. This growth began to accelerate after mid-2024, when the market was valued at less than $3 billion. The shift came with the passage of the Genius Act, which introduced clearer regulations for stablecoins in the US, providing a regulatory framework that allowed tokenized assets. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. To expand, the US Treasury has been a major driver of this growth, particularly through tokenized treasuries. These digital versions of government debt allow investors to hold yield-bearing assets in a faster, more liquid format. Bonds are now the largest tokenized asset class, valued at $15.2 billion. For crypto investors, tokenized treasuries offer a way to deploy idle stablecoins while accessing traditional money market yields. Major asset managers like BlackRock and Franklin Templeton have moved quickly to meet the demand, building a multi-billion-dollar market around the concept. Not all tokenized asset categories have grown at the same pace. Asset-backed credit, including tokenized home equity lines of credit, HELOCs, and lending vault tokens, reached $1 billion just 185 days after its first on-chain activity. Specialty finance, such as tokenized reinsurance contracts and Bitcoin mining notes, has also seen growth but remains smaller than the gold-dominated commodity tokenization market. The dominance of tokenized gold raises questions about why other commodities have struggled to gain traction. Gold's long-standing role as a store of value and its liquidity in traditional markets likely contribute to its success in the tokenization space. However, the lack of growth in other commodity tokens suggests either a lack of demand, regulatory uncertainty, or simply a slower adoption curve. The broader RWAs market is still in its early stages, and the tokenization of gold has been a key. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Driver of its expansion. As more investors seek to digitize traditional assets, gold's role in this transition could continue to expand. The next signal to watch is whether other commodities, such as silver or energy, will see increased tokenization activity. If regulatory clarity improves and demand for digital commodity tokens rises, we may see a more diversified tokenized commodity market in the future. But for now, gold remains the undisputed leader in this emerging financial landscape.